once in a lifetime deals. We'll talk about that more later. But the first thing I want to let you know is we do have a big announcement about our event in Vegas, February 15th and 16th. I have decided to lower the total from 400 to 300 individuals. I've done that for a couple of reasons. First and foremost, ticket sales are slower than I expected. Second, 400 would have been pushing capacity, and it's probably would be uncomfortable or a little too claustrophobic. So, and then lastly, let's be honest, if I were to book it for 400 and, only support 300, I would be spending about $22,000, maybe $23,000. I frankly didn't have to. So I've had conversations with the Blind Center, and we have decided to take the total to 300. That just means there's not many tickets left to sell. So if you have any intention in going to Vegas, it is time to book your tickets. And we will just be at full capacity at 300 folks. Very much the same size as last year. Last year we had just about 305, I think, when we added everybody together. So again, I am lowering it, saving a bunch of money, lower stress. But now if you are planning to go, it's time to get your tickets. They're almost sold out. We don't have that extra 100 capacity. So I feel good about it. Hopefully you do as well. So, hey, if you're one of the last few to get your tickets, good luck. I hope you secure your spot. Let's talk about next week. We do got a bunch of economic news. 1 second, please. Hey, Sonny, what do you want to do? You a little whiner today? All right. This guy wanted to say Happy New Year. Sonny was whining. I couldn't tell if you could hear him. But on Monday, we do get pending home sales. They are expected to be up 0.7%. Last month, they were up 0.2%. It'll be pretty interesting. Last month was up because of interest rates were low. They were in the low sixes. Now they're obviously in the sevens. So I'll be interested to see if pending home sales are up or not. I'm thinking they might be negative, but we shall see. Case-Shiller is coming out, right? Case-Shiller is coming out with their latest value numbers. It's expected to be up 4.6%. But always remember with Case-Shiller, they are behind. Again, we're just about to enter January, and this report will be for November. Wednesday will be Happy New Year's, January 1st. We will officially be out of 2024 and into 2025. Yep, the year is almost over. Can you believe it? Thursday will be an important day, weekly jobless claims. But as we've been talking about for the last week or so, do yourself a favor. Watch continuing claims. Continuing claims, again, last week went to 1.91 from memory. I might be off, which was the highest in quite a while. So again, continuing claims is my fear. I think there's a good chance the unemployment rate doesn't spike like last business cycles, but I do think continuous claims will be a problem as it soon exceeds 2, on its way to 3, and perhaps higher. So that's what I'll be watching in 2025. And then on Friday, we will get the ISM manufacturing. Manufacturing in the United States has been in a recession. This is one of those metrics that scores 50 as expansion and below 50 as contraction. Is expected to get slightly worse from 48.4 last month to 48.1. So again, still contracting, getting worse. Again, manufacturing has been in a recession for 2 years, 2.5 years, something of that nature. I do want to give a shout out to the ladies of ORAT. Ladies of ORAT are one of the 5 masterminds that we have each week inside school. I had learned in the last 48 hours that they too had their group call on Christmas Day. Again, I think it is amazing that folks are that committed to serving, to giving, to leading, to helping. Shout out to the leaders of Ladies of ORAT, and of course to all the ladies that joined. You're just keeping the trend going. Folks, if you join school, one of the amazing things that you can participate in, it is one of the 5 accountability calls we have. And again, I am not a part of any of them. They are led by other go-givers and contributors. I am looking still for somebody to do short-term and medium-term rentals, something I have zero experience in, and out-of-state investing, I think would be something good to have. Again, I have no direct knowledge of that, so I cannot lead that. Since we're talking about school, let's congratulate John, Jeffrey, and Andrew, all for joining in the last 24 hours. Thank you for being here. Remember, introduce yourself, interact in the posts or forums, and you too will get to level 2 and level 3, where you unlock thousands of dollars in goodies from Ty, from Jason, and myself. Joseph Wang, the Fed guy, somebody who's been on the channel multiple times, has put out his 2025 forecast. There's a lot there, but I've captured a couple of them. He sees no recession in 2025. S&P 500 ending the year at 5,500. The 10-year note at 4%, and gold over 3,000. So again, that is Joseph Wang's call. I will look to get him on the show, hopefully sometime in January. Lots of you have been asking for examples of properties that have gone through the cycle that I've discussed, right? Where they will potentially see a 50% haircut. Well, folks, this is something I talked about with Ulysses from Macro Edge. I used a real life example of a building that Olivia and I bought, but guess what? It's already starting. This information comes from The Real Deal. If you want to know what's going on in commercial real estate, I got to put you down. Real Deal is the place that I go to. So here we go. Fannie Mae has decided to foreclose on some Chicago assets, about 150 units, value of the loan $10 million. Fannie Mae accelerated the foreclosure due to, shocking, I told you guys this was coming. I told you. They accelerated the foreclosure because of disrepairs, neglected maintenance, unresolved code violations, contractor liens, and much, much more. Folks, sometimes it's hard being right, but this is exactly what's happening. You have some owners who know they are effed. They're just effed. They will throw up the property at the price they paid, hoping beyond hoping that some stupid idiot with a 1031 exchange does something really dumb. Most likely not going to happen. While that process is going on and they're in the extend and pretend phase, they will stop maintenance. They will stop paying contractors. They will stop fixing code violations. They will stop. And then eventually, the lender, in this case Fannie Mae, realizes their asset is falling apart and they were foreclosed. This is how this apartment, this 150 units, will undoubtedly be bought for 50, perhaps even 60% off. How about another example? This one comes from Johns Hopkins University. Johns Hopkins University has an office called DuPont Circle Office. I guess it's on DuPont Circle. Shocking. Well, the assessed value of said office building was $42.5 million this year. They just sold it for $20.1 million, folks. That is more than 50% off. What I think is coming is not only these values getting recognized, the pain is coming, but now we're going to see tax authorities have to significantly take haircuts, folks. I don't know how the city or county can maintain an assessed value at 42.5 when you have an actual sale at 20.1. It just doesn't make sense. Counties are going to be crushed. San Francisco is a great example. They're going to be crushed by a drop in tax dollars. As we wrap up the year in the stock market, it is obviously seen as a very good year, if not a great year, by stock investors. But I read an article over the weekend that said the S&P 500, right? The S&P 500, the main index that most people quote when they are forecasting. Did you know, and frankly, are you concerned that 10 stocks, 10 of the 500, if you're doing math, folks, that is 2%. 2% of the stocks make up 39.9%. Let's just round it to 40. Folks, 2% of stocks make up 40% of the value in the S&P 500. I can tell you that that is a record. Is it a concern? You tell me. I have $0 invested in the S&P 500, but I would say that that value looks stretched or concerning. But again, you tell me, and I will certainly ask Dan Bird later today. Earlier, we talked about Joseph Wang's call for gold at 3,000. Well, he has company, Goldman Sachs Research specifically, is forecasting gold at 3,000 an ounce. Wells Fargo actually has an interest rate call in 2025 at 6.3%. I think that is a little aggressive, if you will. Let's talk about something that we heard from Lennar, because I had some questions about what does pace over profit mean? What might we see in quarterly numbers from home builders? Well, folks, I think it is a multi-step process. One, you will see builders get more aggressive with rate buydowns. You will start seeing more and more marketing about, hey, don't borrow at 7.5, borrow at 4.99. Buy my new product. So I think you're going to see some aggressive marketing with interest rates like 4.99, 4.49, things of that nature. Second, when a builder completes a home and it has yet to go under contract, you can expect fire priced sales. That is what pace over profit means. And then finally, this final one is probably more of a hope, but it is part of my thesis to fix the housing market. I suspect as builders move throughout the year, as their current projects end, they will start building, drum roll please, smaller homes. Again, they will go meet the market. You know, one of the ways that you can sell cheaper homes is not only give lower interest rates, but damn it, you can build smaller homes. For example, did you know today that the average new home built is 2,760 square feet? 2,760 square feet. Do you know that the average size home built in 1950 was 950 square feet? So when you hear people talk about housing today being expensive compared to 1950 or 1970, realize that you are getting 3 times the house. 3 times. 3 times. It was 900. Now it's 2,700. That's 3 times bigger. Yes, bigger homes cost more. It is that simple. Let's congratulate somebody for getting 2 deals. Tom got his first deal, and he got his second deal. Tom, congratulations for getting your golden ticket and for getting your first black card. You can get as many of these as you can, Tom, but you can only ever get 1 golden ticket. So, Tom, your cards will go out in the mail, I guess tomorrow. I'll put them in the mailbox today, but they will go out tomorrow. Folks, get ready to start hearing about extraordinary measures and the debt ceiling. Yes, according to Janet Yellen, we might be into extraordinary measures as soon as January 14th, the tail end of Biden's administration, right before the inauguration of Trump. Shocking. Sometimes you wonder if this stuff is all planned, don't you? But yes, extraordinary measures can last for a while, but yes, expect debt ceiling talks to be very popular in January, in the end of January, and certainly the beginning of February. Google CEO in an internal meeting says, folks, it is time to gear up for a big 2025. The stakes are high. Folks, I agree with you. I think 2025 will be the year where folks in our community do the work, write plenty of disrespectful offers, follow up plenty of times, and then ultimately land amazing deals. It won't be easy, but as the year goes by, finding more and more motivated sellers will be easy. So, folks, that's what we got for the day. Again, shout out the ladies of ORAT for maintaining the streak and recording doing a session on Christmas Day. Remember, folks, if you had planned to come to our Vegas event, it is time to get your tickets. I have reduced capacity to 300. It is saving me, again, $20,000. It is going to make the venue more comfortable, just like last year. and I don't have to stress about selling it out. So again, if you've ever planned to go, time to get those tickets. You can go to Eventbrite, search One Rental at a Time. It'll be there for you. Folks, have an amazing day. Take care. Later.